Hello everyone. Today I'll tell you about credit policy. Credit policy is a critical document for nearly every organization, but especially for those B2B businesses who manage trade credit. This is an operational document defining a number of operating rules for the sales process that must be followed by the entire company. It is a document which specifies operating standard modes for all stakeholders while providing rules for exceptions. This is an operational document which sets operating modes in accordance with the interests of the company, whose ultimate goal is to be paid by its customers. Some factors company will want to address in setting its credit policy include 3 questions about credit terms: when will payment be due? What discounts are for early payment? And charging late payment penalties? The credit terms offered to customers for early payment need to be sufficiently lucrative for them to want to pay early, but not so lucrative that the seller is effectively paying an inordinately high interest rate for the use of the money that it is receiving early. Find out what the usual percentage is in your industry by asking others in a professional association. The term structure used for credit terms is, for example, if a customer is supposed to pay within 20 days without any discount, the terms are net 20 days, whereas if the customer must pay within 20 days to qualify for a 2% discount, the terms are 220. To expand it, if the customer must pay within 20 days to obtain a 2% discount, or can make a normal payment in 30 days, then the terms are stated as 220 net 30. The second step, you need to decide about deposit policy requirement. A deposit prior to delivering the product or service? Will it be refundable? The third step is credit limits. Is the maximum amount of credit that vendor will extend to customers? What parameters will be used to determine who qualifies for what? Customer evaluation criteria. Company will need to develop a credit evaluation procedure to know who is a good risk and who is not. Factors to consider include volume of business expected, customer's financial capacity, how long company has been around, and a credit check. Large companies have a separate department for this function, and smaller often use credit service, such as Dun & Bradstreet, to do these checks for them. There are also credit reporting agencies, Experian, TransUnion, Equifax, for running a credit check. You need to remember that bad debts are expensive for any company. And then for preliminary customer verification. Attention! Your policy will be well documented. You and customer have agreed to the terms. See you on www.fedmindset.com or YouTube Fed Mindset channel.